Hey, welcome to the Closing Beat, everybody. Happy Monday to you. How you doing out there? Hope you're having a good day. If you could have caught the conversation here a second ago. For some reason, Chris has decided to use my bathroom. I intentionally try to leave it messy in there. We got all kinds of bathrooms in this place, and man, what are you doing? Yeah, you got no words, man. Speechless, busted. Hey, anyways, we're financial advisors here at Jazz Wealth. Believe it or not, that's what we do. We're just laid back, real relaxed here. We try not to be scary and intimidating like other advisors. And today we do a show called The Closing Beat. This is our effort to try to teach you a little bit of something about what's going on with the markets, give you an update of things, maybe keep you out of trouble a little bit, right? If an advisor can grow your dough, that's great. But if he can keep you from wasting your dough, that's also good as well. So we're going to cover that. Also, thank you for those of you that met us in Atlanta this weekend. That was really cool. It's actually a good show, good weather and everything. Happy to be back. Our Wine and Wealth class last week was the July financial focus, and then we did a little election fun in there as well. And a week before, Eric did some geeky stuff to get you to think outside of the box. Not the kind of stuff you're going to hear anywhere on the old public interwebs there. All right, let's start with the stock market here. So Monday, typically it's pretty light. Mondays and Fridays are pretty light in terms of earnings. McDonald's and stuff, we'll go over all of that. But economic news as well tends to be pretty light. Had some inflation numbers come out. And really the focus this week is moving towards the Fed, right? On Wednesday, their rate decision. Now, I don't know if we've ever gone over this. I know I've showed it before, but if we've never gone over this, here is, I'm going to bring that down, make that a little bit better. Come on. Yeah, let's clean it up a little bit. So this is the Fed Rate Watch tool, and it's based on, the probabilities are based on actual Fed funds bets, right? These are people making futures bets on interest rates. Now, you could do the same if you'd like. And so this looks a little bit nasty in here, but basically what we've done is said, hey, for the July meeting, right, up here, oh, you can't even see my cursor. All right, so for the July meeting, we have current rates at 5.25 to 5.5. That's the current range. Basically, you can see the probabilities are that that's how it's going to stay. The far right graph there is what's showing that. There's currently a 5% chance that they will cut rates by 1/4 point. So essentially, it's not happening, right? So as we go into this Fed meeting, it's not about the fact that they cut or didn't cut. What it's going to be about is confirmation that what they've said about cutting in September is actually what they're thinking, right? We don't want to see any dissension between anybody that's out there, or we want to see that everybody agreed. And so that's largely what we'll be looking for. Nobody cares. When the rate decision comes out, there'll be nothing, right? The market tends to wiggle a little bit, but there won't be much. The Fed press conference afterwards, well, that's where all the excitement's going to be. If you look to September, highlighted it here so I could show you here. So in September, notice that the highest probability of about 90% is for 5 to 5.25. Well, we're at 5.25 to 5.5 now. So that's saying, hey, we pretty much believe you that you're going to cut rates, but we're not 100% sure. In September, there's a 10% chance that they'll cut rates 2 times. In other words, it'll be a 1/2 point cut instead of a 1/4 point cut. So if you've never seen that before, that's just kind of one way to look at that and gives you an idea of what to be expected going forward. Remember, this does not just affect bonds this time. This affects what? Small caps, right? Everybody and their mother is leaving large caps to go over to small caps now for the belief that there's going to be lower rates, and therefore those guys who can't borrow at the favorable rates of the bigger companies or raise money as easily will be able to pay less for that, which means their earnings will be more. So it's a really simplified way to break it down. Anyways, so talking about that, if we go over to the S&P, we find ourselves at a bit of a holding point, right? What do we do? If we know the big news, aside from earnings and stuff, is going to come on Wednesday, then what do we do now? Really nothing. There's not much you can do. So we have one of these, another one of these almost inside type days there. And for the S&P, down about 1% last week. We had the same Friday rally. Did you catch that? The same Friday rally week over week, 1% each Friday for the last 2 weeks there. But today was basically kind of an average day. And if you look at it, there you go. We share this with clients every month here. This is a July calendar, just an update of things that are going to happen there. What's the average change per day, the average performance intraday, just to show you there. You can see that Monday and Tuesday leading up to the Fed rate decision in the end of July tends to be a slight positive day. Well, what do we have? We had a slight positive day. And in fact, if it weren't for the last 5 minutes, it would have been almost exactly 0.3%. But in the last 5 minutes, they knocked it down there to just the regular 0.1%. So pretty cool there. Now, S&P wise, have you noticed anything this year? Anything stick out to you about the performance of the market? It didn't stick out to me until I was helping somebody with some data, and I was like, look at what's happening. Did you know that 2023 and 2024 to this point are almost identical in performance? It is quite fascinating. Aside from a little spread here in the first quarter, look at the green line is 2024 to where we're at now, right? The blue line is all of 2023. It is like step by step following along. Now, granted, we had our peak, well, we could call it our peak at the moment at the start of July. Didn't happen until the middle of July in 2024 or 2023. And that's where the market peaked until the Santa Claus rally at the end of the year. So I find that fascinating and kind of fun that we're just replicating last year. There's nothing to tell us we need to be more bullish or really nervous. In fact, go on Google keywords and actually search recession. Like nobody's searching it. Nobody's worried. Like kind of just like deer drinking from the lake, and they're not worried about that gator that's sneaking up little by little. So I'm from Texas. I have those analogies. So I just thought that was kind of fascinating that when you look at the performance of the market year over year or year to year, then it's like the same thing. We're like peaking at almost the same point. We've been in lockstep here this whole time. Yeah, it's gone a little bit above and below, but oh man, the correlation is just crazy how to see that. Anyways, that's just, that's what I got for you there. Let's move on. We'll go on over to the charts here. Let's take a look at the old Nasdaq. So the Nasdaq, let's put it this way. The last 12 days, the Nasdaq down 8.3%, not including today, right? The Russell 2000, there it is. If we include today, the Russell 2000 up 8.2 something percent, right? If we include today. Otherwise, the Nasdaq down 8.3%, the Russell 2000 down say it the right way. The Nasdaq down 8.3%, the Russell up essentially the same exact amount. That spread between the Nasdaq performance and the Russell 2000 performance is almost the widest ever in history. There's only one other time where it's been spread by that much. So that's just another way to kind of illustrate money's moving out of those large caps, those big tech names that are, not doing so well right now. Money's moving out of that, going to small caps, which tells you what? Wednesday, that Fed meeting is kind of a big deal. Not the announcement, but the talk afterwards there. So I just thought that was pretty cool. All right, moving on here. The bond market, a little bit choppy, right? Going into a Fed meeting, what do? Oh, I don't know. Let's just sit and wait. Short-term, long-term, doesn't matter. Crude oil is the more interesting thing here if you're looking for volatility. So crude oil, I'm not going to draw it, but you can kind of see this pattern. We've got lower highs working our way over time, right? And higher lows, at least at the moment. So we have a while until we could make a decision on that. We're going to do it. So take a look. All the technical traders love looking at this stuff and, maybe it's right, maybe it's not. I don't know. But this is what they look at and this is how they make their decisions. These are how algorithms make their decisions as well. And so money will be moving based on these decisions, right? So look, now it's clear, right? We've got oil moving back down to the higher low portion of its short-term uptrend, I guess, kind of sloppy. And then we have the lower highs moving through here. How do we know it's going to take some time for this to be resolved? Because the distance between the lows and the highs is darn near $10. So we have room for oil to be unpredictable, driven by news, Wednesday's events when we get the inventory numbers there, and it can be sloppy. So if you're an oil buyer, well, you're thinking, well, we're getting towards a point where I might like to take a shot, and then if it breaks down, I'll just take a small loss, right? But you're getting to that point where you could be a buyer. However, why would you do it now? What would drive you to do it? What would drive the technical trader to do it now? There's not much, right? So it's kind of an interesting thing to watch, but in progression or in progress, right? Gold didn't do anything today. Well, now it's flat. Not really. No, there's nothing to say there. Yeah. Okay. So do we have a Guess the Dow discussion?
We can have a discussion about it, but we do have a winner. Yeah, if you want to go ahead and take a look at that. We got Sandra O. Sandra O was your winner from last week. She's not a client, so she's going to get a gift card for $100. So good for her.
She won before, right?
She may well, yeah, maybe. Oh, I don't know. I haven't gone back and looked, but we can go back and look at that. Certainly.
Yeah, I think Sandra's won before. I recognize
a poll there. If you want to take a look at the poll in the chat, Pedro requested a poll. We did a poll.
There's a poll.
Yeah, you got to click.
Oh, are you a buyer, a seller, or oh my gosh, 49% holding cash. Okay.
Interesting, right?
That's a good one. We know where you stand there. And not a bad idea, right? So yeah, I get it. You're shifting some money to small caps. Maybe, I don't know, you maybe wait for it to pull back. But in the meantime, you go, I have this incredible profit here. I see the stats. I see what the market does. I know we're in the summer. I know the elections are coming up. I know things were overbought to an extreme at one point. Maybe I'll hold some cash. In the short term, that's okay. And when I say that, I'm saying that if you're trading, right, you have your own account, whatever. But if you're long term and you have your whole plan worked out, can you afford to be in cash long enough? I get that question a lot. I love working through that sort of thing. So happy to do it. If you want to check us out at jazzwealth.com, that's marketing. That's marketing for you. All right, let's do some stocks in the news. I'll take your questions and then, call it a day. So you got Apple first up here. I guess the AI, they got a teaser of the AI features that are supposed to be coming to the phone and everything, and the rest of it is all delayed. Didn't seem to affect the stock too much today, but not a good reason to get it to bounce. Abbott Labs, the lady that sued them for the premature baby formula, well, it's a whole group now, but she started it. $495 million settlement. Why isn't the stock lower? Remember, we talk about this when Google gets the antitrust lawsuit, or like Europe wants them to pay something, or an airline has to give back a lot of fees or something. It's rewarding to know the number, right? They're not going bankrupt by paying this money out, nor are they going to pay it all out in one shot. But now that we know the number, we can apply that to their balance sheet, and you can see what the stock is actually worth. That's why stocks don't tend to fall on that news, right? When we know the number, it's like, okay, great, it's worth this now. Instead of going, oh, that's bad news, maybe we should just, sell it off. I had no idea about this. Deadpool and something, what's the other movie? Kevin's the guy. 2 movies, Deadpool and the Wolverine, I think, right? That just came out. It's a new one, right? Okay, so those 2 movies. I didn't know there was another Deadpool. I've seen Deadpool 1. There's 3 now. Oh, man. All right. Well, I really like the first one. Anyways, Cinemark, of all companies. That's a movie theater. Right? You got one in your area there. Blockbuster opening week for them. They made a ton of money off of it. Stock breaks out. It's not really a breakout, but you could see. Kind of broke out to highs, and that's in the news for that. McDonald's. All right. So McDonald's saved themselves. Remember when Starbucks, the last quarter, Starbucks goes, oh, hey, we're selling less stuff. People don't want to pay the higher prices. And we don't understand that. We don't think that's a reflection of the power of our brand. And I kind of teased them like, that's a horrible answer. Your customers are telling you what they want, and you're choosing to say, we're stronger than that. We're not going to do it. It hurt them, remember? McDonald's comes out. They go, yeah, all right, so we've got these earnings here. Our store sales now officially in negative growth territory, meaning they're not growing sales. They're now going backwards, right? That's been declining for a while. Hey, we've been raising prices because kind of we have to a little bit, but also it's like, hey, if people got money, we're going to raise our prices. They said, hey, man, these price increases have hit our customers. We see that, and we are working on ways to fix that. That's the right answer. That's how you say it as a company. You tell people, oh man, sorry it cost more. We think you should pay more because of the power of our brand. I'll never forget that. Anyway, so McDonald's back to the recent highs, however, still severely discounted if you're into that sort of thing. All right, moving on. We've got earnings kicking off. I mean, earnings season really getting back underway here with guess who after hours tomorrow? Starbucks. Let's see what they have to say. Microsoft, Mondelez, they make cookies. AMD, Procter & Gamble, Pfizer, Merck, a little bit in that biotech healthcare space, and a handful of others. I'll take your questions if you have any questions. 42% of you finally decided you are holding cash at the moment, not willing to buy here at this point. 23 of you are not sure and should go to jazzwealth.com to get more advice. We'll be happy to share that with you. Brian, hey, there he is, man. Nice to meet you as well. I love it. And like, we're here. You know what I mean? Like, if you're in town, you're a client, and you're like, hey, I'm just in town, I want to say hi. Like, we're real people. You can come by and say hi. I love it. Costco had a nice pullback. Costco, after just killing it there before, finally pulling back a little bit. A little bit better. Yeah. Not bad. Special dividends. No, they already did that. They did that like twice over the last couple of years. A $15 dividend. Yeah, that's crazy. Shael, that is a cool name. I was going to sell and hold cash for a bit, but let's see what happens the next rate announcement. Yeah, and why's it got to be 100%? You know what I mean? Look, like if you dig through your positions, you go, I got a nice profit there. What if you take some of that money and just put it off to the side? Maybe buy it when it gets cheaper. It's the world we're living in now. Yeah. William says, McDonald's show slowing growth. Is that a bad sign for more people just learning how to pack meals and eat at home? It could be, because if you think about the lower end of the restaurant consumer there, if they're struggling to buy McDonald's or want to, buy McDonald's, what are they doing? What's the alternative? Where is that place? That's it. You pack your stuff and you eat, or you just don't go to McDonald's. I don't know. Dr. Horton says, man, if we follow that 2023 chart, does that mean we're going to get a buyable correction here? Well, I can't predict that that's what's going to happen. I just thought it was fun to go, look at it. It looks just like it. And I hope that we do get a pullback going into the elections there. I think that'd be great. Historically, after the elections, though, besides a couple of just old-time ones, you do see that rally. So, yeah, I don't know if you can say, like, oh, it's also kind of coincides with the Santa Claus rally or whatever, but in election years, that is possible. That is common. Yeah. Hey, what do you think about Box? These guys, man. I'm biased. I'm not going to say anything. I know these guys. Let's just go with that. Not for me, right? Dexcom, what about Dexcom? I don't know how you get a 40% drop on earnings there. Did you guys see that? This was on Friday, I believe. This earnings season, if you miss, you are getting punished. Look at the stocks that have missed. It's not like an above average amount or anything. Maybe I could share that tomorrow. But if you miss on earnings, like Dexcom doesn't fall 40%. That's just not the way this goes. How do you not kind of like that if you're in that space, especially if you're familiar with the medical side and what they do, right? So, was it the DX7, Dexcom 7 or something, now cheaper over the counter and stuff? Yeah, man. You like Broadcom? I don't know what that means. Those kind of questions I can't necessarily answer, because do you like it as in like you own it and you're worried about the pullback? So a little bit more on that one there. Sir Francis bought that dip. He likes a dip. I'm always going to be a little bit biased in that respect. Something like Broadcom too. Like I don't need to feel like I got the best possible price, but I need to make sure I'm not paying an above average price. That's just the way I feel about really life in general, but what are you going to do? It's my job, right? Anyways, so that's a good coverage of today. Hope you learned a little bit. We'll wrap it up there. We will be back tomorrow to do this all over again. And then next week, if you're going to be in Indianapolis, downtown Indianapolis, we will be there. We're going to have one great location to hang out, by the way. So more to come on that one. And you guys enjoy the rest of your day, because guess what? The rain, like on the clock. It's like it knows we're about to finish the show. Enjoy. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.